Yeah.
Yeah. All right, keep on rolling, baby.
I love Limp Bizkit. I love it.
You know what time it is.
I do.
Hey everybody, it's your boy Chicago Sean McLaughlin. I'm the chief option strategist at All Star Charts, and with me on Mondays, as always, Steve Strazza, our head technical analyst. How you doing, Steve?
What's up, man? Doing all right.
I'm glad to hear that. You were kind of missing in action this morning. A little emergency on the home front. Not really, but
it's a sick day over here at All Star Charts. The whole office is sick, which is ironic because we all work remotely. So I don't know how this happens.
I'm the lone dissenter. I am not sick. I hope to stay that way. Maybe it's the clean mountain air here where I live. I don't know, but knock on wood.
I don't get my germs through this call, so.
Yeah, well, anything's possible, I suppose. All right, so this is the Flow Show. This is the show where me and Strazza get to talk about unusual options activity and follow the path to see where that's leading us into maybe some new trade ideas. And what's unique this week is usually it's just me who's seeing this list for the first time, and Strazza gets to surprise me with some ideas. But guess what? Strazza's seeing it for the first time today too, aren't you, buddy?
Yeah, I haven't put the post out yet for Follow the Flow. Have barely looked at the list. I know some stuff from watching last week, but this will be fun. Let's go cold turkey.
This will be fun. But hey, we're going to try to keep this short here because we both have other things we need to do today. But hey, before we look into the options flow strategy, I would like to point out how much VIX has dropped in the last, we'll call it 5 trading days. I mean, we had been hovering above the 30 level. The 30 had seemed to be the floor for VIX for quite a while. I got the chart here up on my screen. And finally, just in the last week, we finally decisively broke below 30. I mean, is this the signal that, at least as far as the stock market is concerned, that we're starting to get close to an all clear signal? We could all start freaking out about all the headlines, or is this just a head fake?
I mean, listen, for bulls, it's nice to see the VIX retreat like this back into its old range, right? I don't think you want to make a big deal of it, but we were elevated and now we're back in that former range that we were hanging out in for so much of last year. I think it could go even lower. That would be better. Get it back in the low 20s, even the high teens. But just getting out of those 30s is a positive development, right?
Right. And for those of you who don't follow VIX as closely as perhaps I do or Strazza does, what we normally want to see, an acceptable range for VIX is usually, 20 is the generally accepted kind of the upper level of where VIX will go. And the low teens, maybe 11, 12 is kind of the floor that you want VIX to kind of stick around. Anytime we're in between 12 and 20, that's just kind of normal market operations. And it's been a while since we've been consistently below 30. For all the reasons you would expect, right? With all the coronavirus stuff and the war and the interest rates changing. I mean, there's a lot for the market to digest here. Maybe we're going to start going back to the regularly scheduled programming here in the stock market, but we'll see. We'll see.
I also think it's interesting, right? A lot of people are probably aware of what happened with the, I don't know if it's pro shares or what, but VXX. Did Barclays just call the peak in volatility when they froze up the trading in VXX?
It's an interesting conspiracy theory we'll have to dig into another time when we have more time, but I like where your head's at on that one. All right, so let's dig into this options flow chart here, and just for everyone, we say this at the beginning of every show on Monday, but we'll just really quickly go into this and say this is just pointing out where we've seen some unusual trades, some large trades either on the call side or the put side. This doesn't necessarily mean that we need to act on these trades, but it is kind of a first filter that draws our attention to these names, and if we see a technical picture that lines up with some of this unusual options activity that we're seeing, it gives us a little bit of confidence that, hey, maybe there's a trade here, right?
Absolutely. All unusual options flow, bullish and bearish. We had some interesting bearish splashes last week. I think that's a good place to start.
Well, what stuck out for you on that?
So a lot of times you'll see the unusual bearish activity at the index level. Maybe it's hedging, maybe not, but it's just something I've noticed over the years. We saw bearish flow in both ARK Everybody's aware of the ARK Innovation flagship ETF, ARKK, and then also the iShares Germany, EWG. So what's interesting about Germany is the activity was on March 14th. So into that initial bounce on Monday, and the bounce from last week or the week prior, really, basically that was getting faded by options market participants in this case. I think, that's kind of a cute trade. If we look at the EWG chart, I'll pull it up here, this thing is really stretched to the downside. International equities have been under pressure with the geopolitical headlines going on in Ukraine and Russia. So this is a really zoomed out view of iShares Germany. As you can see, this chart, this is why we pay attention to polarity, ran right back up to these former highs, failed. But I mean, we're in a significant drawdown here. So I don't know if you really want to kind of press bets in something like this here.
So you're seeing a lot of bearish activity, people fading this bounce that we've seen over the last, let's call it 2 weeks.
Right. We got this flush lower, and then you're seeing puts entered on this little maybe dead cat bounce, right? Interesting.
Well, look, if you're going to press a bet on the bearish side here, it's probably best to do it on a big bounce like this. I wouldn't want to be buying puts at the bottom of that move. So I don't know. Time will tell if that's smart money or not. But that's interesting information for sure.
And then if you look at ARK, we don't like the idea of, pressing shorts in ARK here either, because you have these former highs here. This is how we would draw something like this. These are the pre-COVID highs from February 2020. Did a complete round trip here, all the way back to pretty much where we started before the COVID sell-off last year. We shook lower down here. This is how we would typically mark up something like this. We would draw a little circle here, and that's like the oopsie move. And now we're firing higher. Now that you have these, former highs to trade against, your risk is really well defined here. There's a nice bullish momentum divergence in place. Also, if I brought up momentum, you can see that. I don't think this is really the place to get short. I think the place to get short in something like ARK was when this topping formation was breaking down late last year. You had a nice retest here. Now we're another 50% lower. I don't like it here.
Right. And if you look at my chart real quick here, I'm looking at the ARK chart, and at the bottom of my screen here, hopefully you guys can see this, I've got the implied volatility trend, and the implied volatility that's being priced into ARK options is still very high. And that tells me that, boy, if you want to get aggressively bearish here, the options market's not going to be very accommodating. They're going to make you pay for it. I don't like the idea of getting aggressively bearish here either. I think, this is just my opinion, I don't really have any strong reason to say otherwise, but I feel like, if anything, we're going to go into a little sideways, messy sideways, probably 55 or on the low end, maybe 80 at the high end. This actually might set up as a good iron condor candidate there, Strazza. A little delta neutral, sell some premium. That might be a good idea, actually.
After such a, huge bounce like this, a little chop would make sense here. A little bit of sideways action.
Well, normally, I'm kind of surprised. Normally, when you see a big bounce like this, you'll see implied volatility come down pretty significantly. Now, it is off its peak of from 4 days ago, but it's still sitting in really high levels. That surprised me. I would have thought that IV would have come back a little bit, but hey, that just tells me that there's a lot of people that are still scared in this stock. I don't think people are being aggressive. I think people are still scared, and that's why we're seeing high implied volatility.
We're also in an environment where, to be fair, Chinese equities, if you look at Chinese internet stocks, what did they see, like a 30% single day move last week? If you're looking at like KWeb. So
yeah.
The indexes have been so banged up. A lot of the beaten down stuff, ARK can be in that category, biotech, IPOs, Chinese internet. The really beaten down stuff is seeing just crazy volatility right now. So,
right. Well, hey, the thing about the volatility, I'm going to bring this VIX chart back up one more time. If we see this trend continue lower, then that might be the end of the era for us for selling some premium for a while, because we had a nice little good run here for about 6 weeks where we were just putting on a whole lot of delta neutral premium bets because, the market was giving us great edge to do so. That didn't mean we won on every trade. There were certainly some premium selling trades that we lost on, but on balance, we came out ahead. And in these types of VIX environments, you definitely want to tend to be a net short premium seller. So as VIX continues to retreat, we might start looking for more opportunities to take aggressive bets by buying long calls or calendar spreads and things like that. I mean, I bought some long calls today in a stock that we put a position on because the conditions are starting to favor it. But going back to this list here, the follow the flow, are there any names here right now outside of index-like names? I mean, anything sticking out that lines up with the technicals that we want to act on or might want to act on?
I'm going to set you up nice, and then we'll look into this one stock that really stands out. So the biggest theme that we've always talked about since we started this show, that we've been talking about, in regards to the follow the flow column for months now, is the commodity theme, right? So again, this week you could see it just walking on down this list of unusual activity at Freeport-McMoRan. It has shown up on our follow the flow scan, I believe, 4 times in the trailing month now. Options market participants just love this one as a vehicle to bet on this commodities theme. I like it a lot too. I'm currently long as well. We also have Schlumberger, Resolute Forest Products. That's a paper and products, like a forestry company. So same kind of theme in my opinion. You have Shell. Everybody knows Shell. Delta Airlines, I would throw in that cyclical theme, maybe not commodity stocks, but cyclicals. So we're still seeing that. And I like Freeport-McMoRan. I know we have on something similar in Nucor, but still a really nice chart. A nice retest last week. Looks like it's, kind of resuming higher now. What are you seeing when you look at the chains? I'll pull up the chart.
Well, for FCX, these are very liquid options, which we like. Implied volatility is coming back down, still a little bit high. If I were to put on some kind of bullish bet with FCX, I would do a spread. I know. We joke that we love the risk reversal a whole lot, but I probably wouldn't put a risk reversal on in this situation. Probably a bull call spread is what I'd look at if I go into the options chain here. I want to give it at least 3 months. It's kind of a pick 'em here. We can go anything in the summer, July, August, September, probably September. Just give us some more time.
Yeah. With this cyclical theme, this is a brand new, bull market for commodities. In our opinion, we think that these commodity stocks have a really long runway. So I don't think you can give them too much time. You really can't go too far out with this trade.
Right. What when you're looking at the FCX, are there any upper price levels you think we might target over the next 6 to 9 months? That'll give me some context of where I could put a spread on here.
Yeah. Let's draw the fib out. So the way we've been looking at this one is we're drawing a fib from the 2018 highs, which is so off in the level when we look at these commodity stocks. This just gives us a level of interest to pay attention to on the upside. And there you have it. So really above 45, which is those first half 2021, May 2021 highs. We're above there, called 45. We're looking at 70.
Yeah. Well, is that a coincidence that the September options, they only go up to a 70 strike? Somebody knows something? Well, with that being as it is, and there's some pretty good premium at that level here. We got call options bid at $1.38, offered at $1.54. Looks like we could put on a spread, a bull call spread, where we buy it at 50, and buy it at 50, sell the 170s. Or sorry, the 70s. Let's see what that price would work out. It looks like we could buy that for about $1.90. I actually like that price a lot, for considering the upside. Oh, sorry, that's why I like it a lot, because it's not the right price. I got to do this. There we go. That seems more reasonable. Wow, I was thinking I was getting a $20 wide spread for $1.80. That was a steal, but nope, that's not the case. A 50-70 bull call spread, we'd pay about $4.87. That's a more fair price, probably a little bit more than I'd want to spend, to be honest with you. Actually, no, that's a good price. That's a good price. Anything below 5 is a good price. So that's probably the way I would play that if we wanted to put the bet on that we think this is going to make a run at 70, because we're going to be leveraging the relatively high implied volatility that's still being priced into these out of the money calls to lower our cost of participation. And 70 seems like a level that we might hit some resistance. So might as well sell the calls there. Yeah, I think that's how I would probably play it.
And what makes you say 5 is a good debit?
So a good rule of thumb, and there's a lot of people that subscribe to this theory. I'm kind of lukewarm on the whole thing, but a lot of people like to say when they're buying a debit spread, or a debit vertical spread in this case, that you don't want to pay more than 1/3 the width of the strikes. So in this case, buying 50 strikes, selling the 70 strike, that's $20 wide. 1/3 of $20 is roughly $7, a little bit less than $7, $6.70 maybe is the exact number. So if we're paying, in this case, looks like, we'll call it $4.90. If we pay $4.90, that's less than 1/3 of the width of the spread. So that's kind of the rule of thumb for people, especially if you're buying a spread where the long option is just slightly out of the money, which in this case it's only out of the money by about 40 cents, 50 cents. So yeah, that's the rule of thumb. I mean, I don't know how much stock I put in that. I just want to have a good opportunity to make money. And look, if this thing does what we think it could do, breaking out towards 70, this type of spread will have no trouble making money.
Yeah, I like that setup a lot. Like I said, I'm in some Freeport calls myself. I know we're in Nucor. A lot of these commodity stocks have already left the station with patterns that look very similar to the way Freeport does right now. And we've seen them make really strong legs higher. So we're really just making the bet that Freeport is going to look similar to many of its peers and go on a similar run as many of them already have.
Right. Well, I'm with you in the Nucor. I have a trade on there. We had a risk reversal on there. We just bought back we sold half of our calls and covered all of our short puts this morning. So that trade is doing exactly what we hoped it would. Now we have a free ride on that for the next few months. I'm liking it. Well, Strazza, we promised we'd keep it short. Let's put a pin in it right now before we go down that rabbit hole about your VXX conspiracy theory. We don't want to bore our audience with that. This is it for today. Thanks for tuning in. We'll be back at you next week with a new Follow the Flow show. Thanks for watching, everybody. Steve, thanks for everything, of course, as always.
Talk to you soon.